What's happening, my eco-conscious financiers in training? Welcome back to another episode of the Do Different Better show, where we talk about wealth, wisdom, and money moves, making finance simple for everyday people like you and me. I'm your host, Elaine Rasmussen, CEO and founder of Social Impact Now and Connect Up Institute, and managing director for the Integrated Capital Fund. Thanks for joining me today. Today's topic is one that I'm really excited about because it's not just about growing your wealth, it's about making a difference. I think I've shared with you in previous episodes, I have a personal goal of moving $50 billion to communities that have been underinvested and underestimated. So, what's your goal? And hopefully, today's conversation will help guide you to getting some ideas of where to start. But we're going to be diving into sustainable investing. And those are just fancy words to say you are aligning your money with your values to create a positive impact in the world. Now, why is this topic getting so much traction? Well, the world is waking up to the realities of climate change and social justice and corporate responsibility, meaning corporations being responsible for the actions and the damage that they do to our communities. And yes, we've become more aware, and many investors like you and me are really starting to realize that our money doesn't have to just have power to grow for us, it has the power to actually shape and influence the world. More and more people are looking for ways to ensure that their investments align with their own personal values. And this trend is growing so fast that it's now a major player in today's investing markets. Enter the ESG framework. That is environmental, social, and governance. All right, so let's get down to brass tacks. What exactly is sustainable investing? In its simplest terms, it's investing with the intention of generating measurable social and environmental impact alongside making financial returns. And there's a whole spectrum of that, and we'll talk about that later. But the idea is that you're not just throwing money at the company and hoping that you're not just throwing money at a company and hoping that it grows. You're being intentional about where that money goes and ensuring that the business you invest in is making a positive difference in the world, whether that's locally, regionally, nationally, or globally. But now let's really break down the ESG framework. The E in ESG stands for environmental. This is all about the company's impact on people, place, and planet, right? Things like how are they handling climate change? How are they managing their energy usage? Or what are they doing with their waste management? Or even how are they sourcing the materials to make the thing that they're making or that they're selling? Next is S. S stands for social. This really focuses on how companies treat their employees, the communities that they operate in, and even the world at large. We're talking things like labor practices, their diversity, equity, and inclusion practices, but also human rights, particularly when we think about production and production in developing countries, really looking at are people in these countries being exploited by the companies in one form or another. Lastly is the G, and the G stands for governance. This is all about how the company is actually run, the corporate ethics, how transparent is the company, is there diversity on the board, whether that be gender, ability, ethnicity, but also how they align their executive compensation package and performance. So here's a fun fact. Did you know that sustainable investments have grown by over 50% in the last few years, now reaching $35 trillion globally? That's trillion with a T. People are waking up and realizing that sustainable investing isn't just about feeling good, but it's also big business. There's been a whole industry that has grown out of this concern or desire to focus on impact and social responsibility. So now that I've given you a little bit of background, let's talk about sustainable investing as an approach. Really, like everything else that we talk about in this show, it is not a one size fits all. There are different ways that you can align your investments with your values. So let's dig into a few of them. Number one is called SRI, or social responsibility investing. This is where you actively avoid putting money in industries or companies that don't align with your values, like tobacco, weapons, or fossil fuels. Sometimes these three are called sin investments or sin companies, meaning that they do something that has wide scale and wide reaching negative impacts. You can screen out the companies that aren't doing right by the world, in your opinion, and focus on those that you feel are, right? Number two, impact investing. This is all about finding companies that are directly working to solve specific societal or environmental challenges. Think of a company tackling a clean water shortage or sustainable energy or affordable healthcare. Then there's three, thematic investing. Thematic investing is where you focus on specific trends or themes like clean energy, water conservation, or even gender equality. This is for people who are passionate about particular issues and want to direct their money to make an impact in those areas through the investments in the companies that they're choosing to invest in. But at the end of the day, sustainable investing lets you make a difference while growing your own personal wealth. There are a couple of other ones that they're kind of usually lumped in together, but they're all kind of a little bit different, which is values aligned investing or faith based investing or gender lens investing. So, well, I'll talk about values aligned investing, meaning you hold a set of values that you are looking for a company to hold. Now, this isn't about you directing that company to invest in those things. And we're going to talk about a methodology of doing that. But this is like, hey, I believe in making sure that a company works off of 50% recycled products, right? Or they're incorporating 50% recycling products in their output. Okay, that's something that's important to me. I want to find companies and invest in companies that are put a high focus on recycling, right? Or water mitigation, water loss mitigation. Faith-based investing is exactly what it sounds like. It is investing in an alignment with your faith, whatever that is. There might be things that are not in alignment with your faith, and so you choose to not invest in companies or make sure that you're excluding companies that violate things that are a part of your faith. One of those might be anything related to the sex worker industry, whether that be pornography or whether that be the sex toy industry. Your faith may prevent you from making any investments in companies that align with that. And then there's gender lens investing, which is exactly what it sounds like, which is you are investing with a lens that prioritizes women, and how you define women is up to you. And you wanted to make sure that companies that align with that definition of what you're determining as gender are doing things and in making investments, or they are doing their processes, procedures, and work in alignment with that. I recently, a couple of years ago, worked with a group of investors across 6 Asian countries that really wanted to adopt a gender lens in their investing. They had looked at their portfolios of investments, and the predominant portfolio companies were led by men. I think one of the organizations that I work with, 92% of their investments were in men. So they really wanted to take a look at their processes and procedures to see where are their processes and procedures, or even intake system, really leaning towards excluding women. And so I worked with them over the course of 6 months. It was an amazing project, and we very quickly started to see some really great results. But I really enjoyed working with these companies to be able to help them adopt a new way of thinking and adopting their processes to allow for an increase in having more women as part of their investment portfolio. Some other work that I think it would be valuable for you to know about, particularly if you're into genderless investing. I had the great honor and opportunity to work with Suzanne Beagle on the Gender Smart Framework. And this is really a global field building initiative that helps investment leaders and influencers unlock gender smart capital at scale and at global summits. And recently, Gender Smart merged with 2X Collective and now is 2X Global. So I definitely encourage you to check that out and see more about what they're doing. But here is my challenge for you. I know that this is a lot, but I really want you to start thinking about reflecting on what are your values. Really, this is a journey, not a destination. So think about just starting jotting some things down. Very similar to if you've owned a company, if you've created a core value statement, or you have just in your own life, if you want to use your faith as a basis for how you're going to think about this, great. Write down what are some of the values that are reflected in your faith. If gender is really important to you, what does gender mean to you? How do you define gender, right? If you're really thinking about environmental impact, what aspects of environmental impact? Environmental is a very huge umbrella. When we think about climate change, are you really thinking about wanting to align your values with organizations that are heavy on water recycling or plastics reductions or waste reuse? What is important to you? And once you start to make this list of what's important to you, now every company can't meet every single expectation. So I really recommend getting maybe 2 to 4 of these values that you would like to see invested in your portfolio. And then we'll talk more later about what happens next. But I just want you to take that first step, whether it's environmental, whether it's social justice, whether it's governance, how the organization is run, who's on their board. I remember this was years ago, I think, when Ariana Huffington was on a major corporate board. I can't remember what board it was, but I think she was she was the first and only female on the board. Right. So if that's important to you, thinking about if gender on the board is important to you, what does that mean and what does that look like? Do you want to see a minimum of 50% women on the board? Do you want to see at least 25% women on the board? Do you want at least one transgender person on the board? What does that mean to you? It's not enough to just say, I want to invest in a company that has good corporate governance. Start to think about, well, what does good corporate governance look like to me? Does that mean that they are in the stockholder or the shareholders meeting, that there is a high level of transparency as to what's happening in the company, good and bad? Sometimes companies will only give you the good news. Excuse me. So is that something that's important to you, of like, no, I want to make sure that the company is sharing with me good news and bad news. I want to know that the company is really looking to diversify the leadership team. I'm really looking for a company that has a high degree of give back to the community. They have a high degree of philanthropy in the communities that they live, work, and play in. Whatever those is, there is a way for you to be able to align things that you invest in and make sure that those align with your beliefs. You may not get 100%, but nothing is 100%, right? Nothing is 100% perfect. So just being able to get to some sort of a semblance of what are those high level values, and if you can get to like defining what that is, but loosely. One great mechanism by which to do that is the United Nations Sustainable Development Goals. You might hear them called SDGs. SDGs, I believe it's 18 sort of high level monikers that you can use and leverage as a anchor for how you wanted to build your portfolio. Things on there are like gender equality, infrastructure, partnerships for ESG, reducing poverty. These are sort of like, what are some of the, you can take a look at your values that you create and then match them up with the SDGs. The SDGs are a great sort of high level mechanism by which you can right swipe and left swipe on different investing opportunities. And really quickly, I want to talk about the rich history of ESG and impact investing, right? Actually, the impact investing, while that term is new, it is not something that is actually new. If we go back in history, there's actually a long history of ESG. I'm just pulling up a slide here that I've used in some of my workshops to talk about this. So when we think about Native Americans and indigenous communities have long aligned their money with their values. One of the values that they hold is decisions that we make or investments that we make, we want to understand the impact and know what the impact is 7 generations from now. There's also history of this in Jewish law or Judaic law, which is, and I'm probably going to butcher this, so I apologize in advance, which is the deck, which is ethical investing, that you are making investments that are ethical. There's also in Muslim communities, there is what's called Sharia law. The Quran mandates guidelines that govern the relationship between risk and profit. You may have heard about the Muslim religion does not allow for interest payments. They believe that that is unethical to charge somebody interest on borrowed money. Then you have going into the 1800s, you have the Methodists and the Quakers, and then their investment thesis, they forbade investing in slavery and in war. And then we saw some of this sort of coming into more recent times or contemporary times. When we saw the apartheid and withdrawal, divestment from South Africa due to apartheid. We've also seen this as part of the Dakota pipeline, the oil pipeline across the Dakota nations, and whoops, and people really wanting to not be aligned with that investment. And so there's a long history in impact investing. While it's just now being called impact investing, it is not something that is new. There is some deep rooted history and culture in aligning money with values. So, but at the end of the day, as far as it comes today, I want you to reflect on your values, but I want you to take action. And you can do that by reflecting on your values and think about, where do you want your money to go? Start researching socially responsible, impact-driven, or thematic investments that can resonate with you. And remember, sustainable investing isn't just about feeling good. It's about making sure that you're building a portfolio that reflects who you are in the world and what's the world you want to live in. So that's it for this segment. Stick around for the next one. We're going to take a little deeper dive, and you can actually identify what these socially responsible investments are and build a climate conscious portfolio. I'll see you after the break when I show you how to do different better. Welcome back, my eco-conscious money movers. In this segment, we are doing a deep dive into how you can actually find and evaluate social responsible investments. So first, let's start with ESG ratings. So remember, these are the scores that the companies are given based on their performance in environmental, social, and governance criteria. But here's the question. What are ESG ratings, and how can you use them to make smarter investment decisions? ESG ratings are essentially a report card for companies telling you how well they're doing in terms of their sustainability, their ethics, and their governance. These ratings are determined by agencies like MSCI or Morgan Stanley Capital International. That's one organization. Sustainalytics and Bloomberg. Those aren't the only ones, but those are some of the big ones. They evaluate companies based on a ton of data, including their carbon footprint, labor practices, board diversity, and how transparent they are about these business operations. What's great is that you can easily find their scores online. A simple search for ESG rating in the company and the company name will usually lead you to their rating on platforms like Bloomberg or Yahoo Finance. The challenge with this is that these ratings you'll see mostly associated with larger companies. Smaller companies, particularly local, even multi-million dollar companies, may not be rated on these platforms. Even some of the publicly traded companies may not be rated on these platforms. So you just want to know, like, it's not going to be a winner take all situation where you'll be able to go in and find any company that you might want to invest in, particularly smaller companies. But there are ways to know that a potential investment is ESG or values aligned. There are things that are called benefit corporations. These are actual tax entity structures. So it's still like a regular corporation. However, they're what's called a benefit corporation, and that is a filing that they do, an entity structure that they file for. Benefit corporation status is not available in every state. An example of a benefit corporation is Ben & Jerry's. They're located in Vermont, but a benefit corporation basically means that we are here for some sort of benefit. I think you're going to catch a little glimpse of Skittles in the background here. He wanted to make an appearance in the show. Another one is certified B Corps. Certified B Corps go through a rigorous process that is done by an organization called B Lab, and they issue what's called B Lab certification. My company, Social Impact Now, is a B Lab certified company, and it is not easy. You have to demonstrate through not only an evaluation process, but a due diligence process that demonstrates that, yes, what you've mentioned in your assessment is true, and that you are following certain criteria that indicates that you are focused on one or more parts of ESG, or social responsibility. But that's really important that I want you to know is that these monikers give you clues that a company has some sort of ESG or values-based or social responsibility lens in how the company is managed and what it values, and that's important to them. Another organization is what we call SASB, or the Sustainable Accounting Standards Board, SASB. We call it SASB for short. It is an independent nonprofit whose mission is to develop and disseminate sustainability accounting standards that help public corporations disclose material and decision useful information to specifically investors. Another organization who I love, I've worked with them in the past, they're amazing, and that is As You Sow. As You Sow is a corporate accountability nonprofit, kind of like a watchdog organization. They publish reports on good and bad players, benchmarks, and are very active in what's called shareholder advocacy. Shareholder advocacy is the act of leveraging your position as a stockholder through your voting or driving conversation towards ESG aligned business practices like diversity on the board, setting corporate responsibility metrics, investing or divesting practices. If you want to know more about that, I have a workshop coming up that takes a really deep dive into this topic. You can DM me on IG or LinkedIn to get an invitation. But here's a fun fact. ESG ratings aren't always clear cut. Take Tesla, for example. Tesla gets high marks for its environmental impact because of its focus on electric vehicles, but it's also lower marked in governance because of the board structure and other issues, particularly with the CEO, Elon Musk. So don't just focus on the score when you're looking at in making an investment in a company. Dig in a little deeper into the specific categories to see where the company excels and where it falls short. And then you can make an assessment on where does that lie for you? Once again, if you've defined your values, it'll be a lot easier to say, okay, this is the pluses of the organization. This is the minuses of the organization. Here's where my values are. And triangulating across this, this is or isn't a good investment for me. So thinking about all of this will help you understand and strike a balance that can have you make more informed investment choices, right? Okay. Now that you know how to read ESG ratings, let's talk about building a climate conscious portfolio. This is where you take ESG ratings and actually put them to work in an investment strategy. So, what kinds of companies should you be looking at if you want your portfolio to be more environmentally and socially responsible? Number one, having a sector focus. Start by focusing on industries that are actively improving or actively working to improve sustainability. Look at sectors like clean energy, sustainable agriculture, water management, waste reduction. These industries are the key players in the fight against climate change, and they offer strong long-term growth and potential. 2, green bonds. If you want a more secure fixed income investment, consider green bonds. These are bonds that are issued by companies or governments to fund projects that have a positive environmental impact, like renewable energy plants, wind turbines, upgrading water infrastructure, like we're seeing in some cities. They offer a way to support green initiatives while earning steady interest on your investment. Number 3, exchange traded funds. I did a whole show on what exchange traded funds are, but they're also called ETFs. If you're just starting out and don't want to spend too much time picking individual companies and you don't have time to do a lot of research, consider ESG focused ETFs. These funds bundle together a bunch of companies that meet certain ESG criteria. So you get instant diversification and exposure to socially responsible investments. Some popular ESG ETFs include iShares Sustainable MSCI Global Impact ETF. I know that's a mouthful. And Vanguard's ESG US Stock ETF. These are not sponsored. So, once again, I don't know what's all in these portfolios. So, definitely you should take a look at this, right? Go looking for yourself, do your own due diligence. So here's an action step for you. Take a look at your current portfolio. Are you already invested in companies that align with your values? If not, research ESG focused funds or ETFs that you can add or you can swap in. Start with something simple. Find one fund that matches your values and consider making the switch. Okay, whew, that was a lot. Now, I know some of you may be wondering, is sustainable investing really profitable? And that is a big conversation that is happening across ESG. I remember when I got into this back in 2012, that the conversation was there was no way to do that. And I'm pleased to say, one, not only is there a way to do that, there are market rate return ESG focused investments that are great. But there's also, if you don't need to necessarily make market rate returns or you're willing to make concessionary market rate returns, there is a correlation in my estimation between the impact that you want to make and the type of returns that you want to make. That is not to say you can't have impact and returns at the same time. I'm not saying that. But in my estimation and according to my research, your impact is directly and inversely correlated to the returns you need to make. To make certain levels of returns, it does require you to not do certain things as it relates to ESG, because doing some of those things do have a financial expense. And so that could impact profit, which then impacts returns. So these things are correlated. You can have them at the same time, but at a certain point, as you want to make more profit, you, by definition, start to impact the amount of social or environmental impact that you want to make. So just understand that relationship between these two things. However, the impact of ESG on financial performance is real, the positive impact. Studies show that companies with strong ESG practices tend to perform better over time. So you might be asking, well, why is that? The reason is because they're already, as part of their practice and policies, reducing risk, right? They're managing their resources efficiently. They're building strong relationships with customers and communities. These companies are not only forward thinking, but they're also better equipped to handle challenges like regulatory changes and market shifts. For example, companies like Unilever, Patagonia, and Microsoft have had successfully integrated sustainability into their business models. Some might argue they need to do better, and that's fair. Unilever, for example, has made huge strides in reducing plastic waste and improving labor practices throughout its supply chain. As a result, they've seen an increase in customer loyalty, reduced cost, and better financial performance. And get this, over the years, ESG focused funds have consistently outperformed traditional funds. This is because these companies prioritize sustainability and are often more resilient during economic downturns or crisis. One of the things that we saw during COVID is that the companies that were ESG focused actually did better and fared better. Well, they had lower layoffs, and they were able to bounce back far more quicker than some of the other companies that did not have some sort of ESG focus, right? So, with that being said, here's your call to action. Take a closer look at your current investments and ask yourself, am I investing in companies that align with my values? If the answer is no, now is the time to start exploring ESG rated stocks. You can really make a positive impact and grow your wealth at the same time. So, that's it for this segment. I'm going to ask you to stick around for the final segment where we're going to talk about long-term financial advantages of ESG, investing, and how you can get started today. I can't wait to see you after the break when I show you how to do different better. All right, my financially woke friends, welcome back. In this segment, we are going to talk about the long term financial advantages of ESG investing. Okay, you've heard all about how to identify socially responsible investments, but now let's dive into why these investments are actually built to last. First, let's talk about risk mitigation. So, if you remember in previous episodes, I talked about risk mitigation is a fancy word for saying lowering your risk to lose money or lose something, right? Whether it be money, customers, whatever it is. Risk mitigation is re- actively reducing your potential for any kind of risk, reputational risk, whatever the case may be is. Companies that are laser focused on environmental sustainability, social responsibility, and strong governance are often better equipped to handle risks like regulatory changes, environment disasters, or labor risk, right? Or labor strikes, I'm sorry. Think about it. If a company is already taking steps to reduce its carbon footprint, it's less likely to get hit hard by new environmental regulations. And if a company is known for treating its workers well, it's less likely to face strikes or costly employee turnover, or quite frankly, something coming out into the newspapers about something that's happening, sexual harassment, or any other kinds of negative impacts on the company. These ESG companies are also about future proofing. They're not just thinking about the next quarter's earnings, right? They're thinking about how to thrive in a world that's becoming more socially and environmentally conscious. By cutting down waste, reducing emissions, and improving working conditions, these companies are set up to navigate the future better than those that are stuck in the old ways of doing business. As a certified futurist, I work with companies to help them think through what are possible future scenarios. And then I work with them to actually help think about what are the things we want to put in place to actually reduce our risk of the negative downturns of those possible future scenarios. So it's really fun and really exciting getting to work with large companies to think about these kinds of things. And actually then hearing about some of the solutions that they come up and then thinking about the products and services that they create as a result to help with that. It's really, really fun and really exciting. But here's a tip for you. While ESG companies might grow a little slower than a high risk, high reward stock, they tend to be less volatile, especially during times of crisis. That means your portfolio is more likely to weather storms like recessions, pandemics, and market crashes. It was documented that ESG or impact focused companies did far better financially and laid off far less employees during the COVID pandemic. Okay, now, I know some of you are still thinking, but Elaine, doesn't ESG investing mean I have to sacrifice returns to support my values? Let's clear that up, right? So, here's one myth that I hear a lot when I'm working with companies or individuals, high net worth individuals. You have to sacrifice returns for your values. That's simply not true. Many ESG funds perform just as well, if not better, than traditional investments. Why is that? Once again, because companies that are committed to long term sustainability and have infused that and internalized it and their people's process in place, they are less likely to face expensive setbacks like fines or lawsuits. And studies show that responsible companies make better long term investments, right? Myth number two, ESG is just a trend. I have been hearing that since 2012. I promise you. I kind of think about it like hip hop. Like everybody said hip hop was just a trend. It was just a fad. It wasn't going to stick around. And hip hop is just as strong today as it was back in 1984. That just tells you how old I am. Okay. But listen, y'all, ESG is not going anywhere. Part of the reason is there's a whole industry that has been built around it. So if there's been an industry that's been built around it, clearly there is some sort of market opportunity and continues to be market opportunity. This isn't just some short lived craze. Sustainable investing is here to stay. And as I mentioned earlier, there's a rich history in impact investing. It just wasn't called impact investing or sustainable investing, but it has been around. It's just now has a codified name that by which the finance sector is now acknowledging this trend or this form or framework of investing. But both institutional and retail investors are moving toward more responsible portfolios. And large financial institutions, even BlackRock and Goldman Sachs, are backing this up by integrating ESG factors into their investment strategies. I have a quote that I have that is by Larry Fink of BlackRock, and he says, to prosper over time, every company must not only deliver financial performance, but also show it makes a positive contribution to society. That was from Larry Fink, CEO of BlackRock, one of the largest investment firms in the world. Okay. Myth number 3. Impact investing or ESG investing is only for tree huggers. No, ESG investing is not just for environmental activists. It's for anyone who wants to protect their investments while supporting a better future. Whether you're passionate about human rights, diversity and leadership, or reducing carbon emissions, ESG has something for you. Once again, even the big dogs are on board. They are really putting billions and billions of dollars behind ESG investing. So if the big dogs are doing it like BlackRock and Goldman Sachs, that means that there's something real that's going on here that you want to unpack and look into, right? Okay, that was a lot, y'all, but we're sliding into the home finish, right? Now that we have busted some of those myths, right? You're not gonna give me the 1-2, right? You really now understand like there's really great opportunity here and you're excited and you want to move forward. So let's get to some of the good stuff, right? Let's talk about how do you start making ESG investments? And once again, first of all, before you even get started, I want to go back to what we talked about in the first segment is which is really understanding what are the values you hold true? What do you want to see? When you start to think about like thinking about through a Native American lens of I want to invest in a company that is going to have a positive impact 7 generations from now, that is a very different perspective than thinking about what kind of returns am I going to make next quarter, right? The traditional thinking in finance is you're looking at things 90 days into the future, quarter by quarter by quarter. I love that line in the Fast and the Furious, living life a quarter mile at a time. That has been the predominant thinking within the finance sector is looking at the returns for the next quarter. And what I love about impact investing is having more forward thinking or future thinking around what will be the impact a year from now, 2 years from now, 3 years from now. Will this company be around? Are they doing practices that may turn customers away from them, right? As opposed to towards them and bringing more customers in. So before you even get started of moving any sort of dollar, I really want you to think about what are the values you want reflected in the portfolio. I want you to put pen to paper to really think about what is important to you. Is it even family, right? You want a family focused business. You want it to be family owned. Whatever those are, that's fine. Write them down. Then once you get really clear about what those are, look at your current portfolio, right? Think about what are your values being invested in is your portfolio invested that's in alignment? What's in alignment? What's out of alignment? If you do not have a portfolio yet, as you're thinking about where you might want to be putting your investment dollars, now we can start to think about, I really want you to start small. So here's after you do those steps, here are some of my practical action steps. Start small. Add 1 or 2 ESG focused funds to your portfolio. Look for funds that align with your personal values. Once again, clean energy, diversity and leadership, or corporate ethics. Tip number 2. If you're just getting started, consider socially responsible robo-advisors like Betterment and Wealthsimple. They're not sponsoring this. There are other opportunities or other platforms that are out there. I've mentioned some in previous shows, so definitely check them out and do your own due diligence on which robo-advisor platform is going to be best for you. There might be one that's already a part of your 401k platform, but so look into that. But many of these offer ESG specific portfolio options. These platforms will handle the heavy lifting of the portfolio management while making sure your money is working towards building a better world. And then there's practical step number 3. For those of you who want more control, set up a consultation with a financial advisor who specialize in sustainable investing. We have some really great ones around here. Centered Wealth is one. There's Natural Investments. They have actually a cohort of investment advisors that have their own, but they pool their resources, but with a back office. Cordata Capital is another great organization that, excuse me, that does active investing in ESG or impact or other things. And they also have some workshops that they do to help folks kind of decide to what end do they want to move their portfolio and any of their other wealth options into more sustainable investing. Those are just a few. There's lots of different ones that are out there. I definitely encourage you to look into them, right? But by working with a financial advisor that specifically does sustainable investing, they can help tailor your portfolio to your values while maximizing financial returns. So I really want to bring in SDGs again, right? I talked about them in the previous segment. Sometimes investors can get too specific. They might say, I want to invest in companies that are in sub-Saharan Africa that have an impact on children from 3 to 5 years old in a particular region in Africa. Well, that is a little too specific. And that's what's nice about the SDGs. So when I think about that statement, we think about, well, I'm going to imagine this person is really interested in gender equality. This person might be really interested in reducing poverty. This person might be really interested in somebody. And these are things that are at a higher level of the SDGs. So you can say, take your values and then maybe compare them to the SDGs. And can you kind of float them up into larger categories, which gives your investment advisor a lot more wiggle room, because the more specific you are, the more difficult it is for them to find investments for you. So if you can zoom in to zoom out just a little bit of like, okay, what are the characteristics of these values that I want portrayed? And can I group them up into the SDGs, and then give your portfolio manager or your investment manager 2 to 3 SDGs that you would like your portfolio to focus on. That will be really, really helpful for them. So here's your final call to action. I challenge you to make at least one small shift towards ESG investing next month. Maybe it's your bank. Maybe you look into changing from your current bank to a bank that has more of an ESG focus. It could be switching out a mutual fund for an ESG fund. It could be setting up a meeting with your financial advisor to talk about this. And if you don't have one, go and start to look for one. Take control of both your wealth and your impact on the world. Well, that is it for today's episode of Do Different Better. I really hope that you're feeling empowered to align your wealth with your values and make smarter, more impactful financial decisions. Remember, investing isn't just about making money. It's about creating the future that you are proud of, the future you want to leave behind for those who are coming behind you. I hope that you enjoyed today's episode. Don't forget to subscribe and leave a review, and share this episode with someone who's really trying to make a difference with their money. Doesn't matter if they have $5 or $500 million. This is, people sometimes don't know that this is a thing. And so we definitely want to share about how there are opportunities to align their money with their values. And as always, I want you to keep doing different better. I'm going to see you next time when I show you how to use your money moves to do different better. Let me know what you think of the show. We love comments. So tell us how this show helped you. If there's a money or finance question you have, or if there's somebody that you want me to interview, hit me up on LinkedIn or Instagram at Do Better with Elaine. I will see you next week when I show you how to do different better.